For you to become successful in the forex market, you have to be mentally and emotionally strong. For you to succeed as a forex trader, you must be mentally and emotionally strong. Forex trading is one of the best business that you can venture into in 2024. But the most important thing you need to work on is your mindset. 2024 is a year filled with milk and honey. So this is a year that you should be thinking of venturing into the forex industry, because that is where people are making money right now. But in today's video, I want to let you know that forex trading is not bed of all roses once you don't know how to do it. So that is why I said forex trading has to do with your mindset. So if you are not strong mentally and emotionally, you can never ever succeed in the forex market. So I want you all to watch this video from the beginning to the end, and your mindset will change. Your mindset about the forex industry will change. My name is Austin Ikeru. I am a professional forex trader. I trade gold. I've been in this business for the past 8 years, and I must say that I am happy with the level that I've attained. So back to what we're talking about. Forex trading is very, very difficult. If you don't know it now. So that is why you need to have a positive and negative approach in the forex industry. You need to know the right and the wrong. You need to accept that you can win and you can lose. So that is why I said your mindset matters the most in the forex market. Like I said in my previous videos, if you want to become successful in the forex market, the first thing you need to work on is to train your mind, because that is what will guide you throughout your days or your years as a forex trader. Strategy can be developed, but your mindset is something that you need to work on consistently, because you might have the best trading strategy, but you don't have the right mindset, and this might cost you to fail. So that is why, as you are working on the best strategy, you should also be working on your mindset. Work on your mindset. Try as much as possible to control how you think, your brain, how you react, because these are the key things that you need to become successful in the forex market. You need to watch yourself, learn how to control your actions, your emotions, your reactions, your psychology. These are the things that you should work on. Now, I want to tell you something that you need to understand. When I first started trading, I never considered these things that I'm saying to you serious. I thought that once you have the best strategy, you have backtested it, then you are good to go. Honestly speaking, I tried so many strategies, I backtested them, and to be sincere with you, I still lost money. I was still losing back to back in the forex market. So the question now is, why am I still losing when I have the best strategy, right, which I have already backtested? So why am I still losing? The truth is that I do not have the right mindset about the forex market, how the forex market works. I do not have the right mindset. So that is the reason why I was losing back and forth, even though I had the best trading strategy. So this is what happened to me. I will analyze the market, right? Let's say I'm trading gold, right? And I will open my chart maybe at the 15-minute time frame or 1 hour time frame. I will analyze the chart, and after then I'll have the mindset that the price will go up, right? I've done the analysis, and the analysis is telling me that the price will go up. So what am I supposed to do? I'm expected to place my buy trade. Since I've analyzed the market, But what happened? I started becoming scared. I became afraid of placing my trade. Before I know it, the price now goes to my direction. And out of annoyance, out of anger, when the price have already traveled like 100 pips, I now placed a buy trade, not knowing that period or that exact time that I placed a buy trade was at the time or at the spot when the price was about to reverse. That means the price has already gotten to the resistance level when I placed a buy trade, and that was the period where the price was about to reverse. So immediately I placed a buy trade, the price now reversed and then hit my stop loss. So you can now understand that it's not about having the best strategy. You might have the best strategy, but for the fact that you don't have the mindset, you don't have the psychology, you don't have the strong emotion, you don't have the psychology to control your mind. You are not physically, emotionally, you are not mentally, emotionally strong. You will still fail. So that is why you have to understand that forex trading has to do with your emotion, your mindset. If you can be able to train your mind, whatever you tell your mind to do is what your mind will do. So this is 2024. I keep advising you guys, this is 2024. Don't allow this year to pass you by. Grab this year with all your mind. Grab this year. Say to yourself that this 2024 is going to be my year of breakthrough. Put it into action. Do not repeat the same mistake you repeated in 2023. Just say to yourself that this 2024, I'm going to be a new person. I'm going to work on myself. Most especially, I'm going to train my mind. I'm going to train my mind so that I will not react to my emotions. I will not react to my fears. I will not allow fear to becloud my judgment. Because if you are a forex trader and you have fear, fear will deprive you from good entering opportunities. So that is why you need to work on your psychology, your emotions, your fear. What are you afraid of? What are you scared of? You just have to know. Let me be sincere to you. You have to know that forex trading is just a game of probability. So why are you scared? What is the fear when you know it is a game of probability? So you need to take risk, right? Just have it at the back of your mind that if you are a forex trader, then you are a risk taker. So you have to accept the fact that you are taking risk. So what is the essence of being scared when you know you are taking risk? You know the business model and you know that the business model is risky, right? So why are you scared? So that is why before you start trading forex, you need to plan yourself. Preparation matters. That is why I keep saying that you need to plan your trading strategy, right? So the first thing you have to do if you want to start forex trading this 2024 and you want to become successful by the end of 2024, the first thing you have to tell yourself is that forex trading is a game of probability. You write it down. It's a game of what? Probability. You write it down. The next thing you have to tell yourself is that forex trading is risky. And for the fact that forex trading is risky, then you are a risk taker. So you accept the fact that you are taking risk. So each time you place a trade, you know fully well within yourself that you are taking risk. So you write it down on a paper that forex trading is risky and you are a risk taker. So once you have written this down, the next thing you have to do is you have to work on a simple trading strategy. Work on a simple trading strategy. It can be a moving average crossover. If your strategy model is based on moving average crossover, then your job is to watch and look for crossover. It could be in the 1 hour or 15-minute time frame, depending on the type of trader you are. If you are a day trader, then I think the 15-minute time frame is the best time frame for you to watch for moving average crossover. So it depends on the numbers that you want to use. Do you want to use the 50 and the 20 moving average, or do you want to use the 20 and the 5 moving average? So it depends on the moving average you want to use. Do you want to use the exponential moving average, or do you want to use the simple moving average? Right? So these are the things you should consider. Or if your trading model is based on support and resistance, right, you use tools like the horizontal line or the trend line to map the support and resistance. So you now know that when price comes to the support, you buy, and when price comes to the resistance, you sell. So trading strategy is something that you should develop by yourself. Pick the one that you believe is simple for you, you believe that you can master, then rehearse on it, backtest it on a demo account, and once you are comfortable with that strategy, then you write down the strategy and say, this is the strategy that I'm going to be using from now henceforth. Now you have written down the strategy that you want to use. Let's use, for instance, moving average crossover. You now told yourself that I'm going to be using the moving average crossover as my trading strategy, and nothing will change it. Right? Even if I'm winning or if I'm losing, I will stick to the moving average crossover. Right? So you make up your mind and say that you are going to use the moving average crossover alongside with a trend line, right? Because you're using it alongside with price action. So when the moving average is ranging, you can either use a horizontal line to map the highs and the lows, so that you know that the price has no particular direction, it's just ranging. Then you know that at that period the moving average crossover might not be reliable, so you can make use of the horizontal line or the trend line. So whatever strategy that you want to use, you want to look at the mechanics of that strategy, look at the weaknesses of that strategy, the strengths and the weaknesses of that strategy, so that you can increase the strength and minimize the weaknesses. There is no trading strategy that is 100%. Every strategy has weaknesses and strength. So don't tell me that there's a strategy that is 100% without any losses. So every trading strategy has winning and losing. So your job is to minimize the losing and maximize the winning. So once you have written down your trading strategy, the next thing you have to talk of is the money management. So you ask yourself, for the fact that your mind have told you that Forex trading is a game of probability, there is no guarantee. So what are you going to do? Are you going to risk all your entire savings? Are you going to risk your house rent? Are you going to risk your family feeding? So this is where the mindset comes in. For the fact you know that Forex trading is risky, so you want to take a portion, right, a small portion from your investment and invest it in the Forex industry, or a small portion of your net worth from your bank and invest it, so that in case you lose it, you won't feel anything, you won't be depressed, you won't go through any psychological problem. Right? So now you have realized that Forex trading is a game of probability, it's a risky business. So as a trader, you are a risk taker. So you have to take a small quantity, a small amount of money from your net worth and invest in your trading. So for the fact you have written down your trading strategy, so the next thing is your money management. So for instance, you have $10,000 in your bank account. You should look for 1% of that $10,000, right? So, or if you have $50,000 in your bank account, you should look for 1% of that $50,000 and invest in the Forex market. Now let's use $10,000 for instance. Let's assume you are already working. You are working in a company, right? And they are paying you salary. But for the fact you are not comfortable in the workplace, right? Based on the fact that the job is too hectic, the job is too much, your boss is embarrassing you all the time, you're not happy with the job, just that you are doing it to feed the family. So you want to venture into Forex trading because you are looking for financial freedom. You want a business that you can do. You have the time to travel all over the world. You have the time to spend with your family. You have the time to do anything you want to do. So these are the reason why you are venturing into the Forex market. But you have to also have it at the back of your mind that it will take a lot of time for you to reach that goal, the goal of becoming financially free, right? You will have to know within your mind that it will take time. So that is why you have to continue with your job. Do not quit your job. Continue with the job. Continue receiving the embarrassment from your boss. Continue receiving the little money you are being paid as salary. Continue enduring the pain of the work just for the meantime, because you are using the money you are gaining from your job to sustain your family in the meantime, as you build your trading career, as you build your portfolio, as you build your financial freedom. You must have to set aside something that can sustain you and your family, because once you venture into trading, you're not going to make money in your first year. You're not going to make money. In every business, it happens like that. So it is not advisable that you quit your day job. You have to hold on to your day job, because that is what is sustaining you for the meantime. So for the fact that you want to venture into forex trading, but your day job should be intact, you should hold on to your day job. So what you will do right now is you now go to your bank. You go to your bank account, your bank statement, look at how much you have in your bank account. Right? So from there, you take a small portion, 1% from the total money you have in your bank account, and invest it in your broker. Invest it in your trading account. So if you have $10,000 in your bank account in general, you have $10,000 in your bank account, then you have to take just 1%, which is $100, and invest in the forex market. If you have $100,000 in your bank account, $100,000, then you have to take 1%, which is $1,000, and invest it in your trading account. So what you will do is this: each time you are paid salary, monthly salary, you take 1% from your income, your salary, and invest it in your trading. So these are the way you grow your account. So let's say, for instance, you are being paid $1,000 per month where you are working. So what you will do is, each time you are paid $1,000, you remove $10 and invest it in your forex account. You remove $10 and deposit in your forex account. So these are what you should be doing consistently every year. So these are the way you are going to be building your trading capital, right? So whenever you lose that capital, you will not feel anything, because you still have enough money in your bank account which can sustain you. With that money, you can still live your normal life, feed your family. You will not go broke. You will not go through depression, right? Because you still have enough money in your bank account to sustain your family. So you take only a portion, like I said, 1% from your bank account, and invest it in your forex. So once you invest that 1% from your bank to your forex account, you take 1% from your forex account and trade the forex market. Let's say you have $100,000 in your bank as your net worth. Your general, the whole money you have is $100 in your bank account, right? So you now take 1% of that $100,000, which is what, $1,000, and then invest it in the forex. You deposit it in your forex trading account, right? So once you deposit the $1,000 in your forex trading account, what you will now do is you take 1% of that $1,000 and trade the forex market, and which should be $10. So you take $10 from the $1,000 and trade the forex market, meaning that you are going to risk only $10 per trade. So each trade you want to execute, you're going to risk only $10. So what will not be your risk reward? Your risk reward should be from 2 and above. That is 1 to 2 risk reward ratio. So as you are risking $10 per trade, you should be aiming to gain $20, $30, or $40 per trade. So once you risk $10, you are aiming to gain $20 or $30 or $40 per trade. So that is what we call risk reward ratio. You are risking small to gain higher. So these are the way you grow your account. So for the fact you've made up your mind that you're going to risk 1%, which is $10 in your trading account, so you should target 3% as your take profit, which should be $30. Right? So $30 will be your take profit, while $10 will be your stop loss. So that is when you now calculate your stop loss and your take profit, right? We call it position sizing. So at that your $1,000 account, you now know the lot size that you are supposed to use. know the lot size that you're supposed to use and the stop loss that you're supposed to use, right? So you might either use 20 or 30 pips stop loss, and you should target at least 90 pips take profit. So that is what we call risk reward ratio. So once you have worked on your money management, the next thing you need to work on is your trade management. So what is the trade management? The trade management is the ability to control the number of trades you execute on a single day. If you are a day trader, you should minimize the number of trades that you execute in a single day, right? So you should only look at high probability trading setup. That is what you should be looking at, right? So if the market is not at your trading zone, or the market is not at your area of value, you simply stay away from the market. You do not need to rush into the market or chase the market. So you have to wait for the market to come to you, right? Wait for the price to come to you for you to strike. So you don't need to rush to the price. You wait for the price to come to you for you to strike. So that is why I keep urging every one of you that you make sure you take your trades from an area of value, either a support or resistance level. That should be the only way to take your trade, right? So if a market is in an uptrend, you should look at a support level to buy. If a market is in a downtrend, you should look at a resistance level to sell. Don't ever trade randomly. You must have a particular spot where you are expected to execute your trade, and you have to be consistent with that. So your trade management means you must know when to place your trade and when not to place your trade, and you must know how to manage your trade. So you know the amount of trade you are expected to execute in a single day, because each trade you take is like taking risk, right? Each trade you take, you have risk money on that trade. So you must minimize the number of trades you are taking. So that is why it is always advisable that you don't over trade. Do not over trade, right? So you also need to understand that break even is very important in trading. The essence of break even is to protect your capital. If the price is in an uptrend, you wait for the price to get to a support level, right, for you to place a buy trade, right? So if the price makes a retracement to the support level, then you simply place a buy trade at the support level, right? So if the price moves away from the support level and goes to your favor, right, and you generate at least 40 or 30 floating profit, you break even. If you are in profit, you break even, right? You simply break even, because you know fully well that if the price returns back to the support level and breaks below it, definitely a new trend has begun. So if the price moves a certain point and you are in profit, you are in floating profit, like 40 pips, depending on the kind of trader you are. If you're a day trader, like 40 or 30 pips, you break even. So what is break even? Break even simply means you take your stop loss to your entry, your exact entry point. You take your stop loss to your entry point, so that if the price reverses against you, it will hit your break even and you are not going to lose any money. So the essence of break even is to protect your capital. So each time trade wants to go against you, it will simply hit your break even before it goes against you. So by the time it hits your break even, you will come out from the market without losing anything, and the price cannot go against you, right? So the essence of break even is to protect your capital, right? You have to minimize your capital, manage your capital very well, so that you can be able to use it to build your portfolio. You can be able to use it to build your business. So that is why it is always advisable that you understand the importance of break even. So once you've mastered how to manage your trade very well, you write it down, then you are good to go. So these things that I've just listed, write all of them down. This now becomes your trading plan, right? This now becomes your trading plan. So every day you have to read it, so that it will be stuck in your medulla oblongata. It will be stuck in your long-term memory. Every day you remember it. Know that this is the particular lot size that you are supposed to use per trade. It will be stuck in your brain, so that you don't increase your lot size. You have a particular lot size that you normally use, which is, for instance, 0.5. Let's say, for instance, 0.5 lot size is your lot size that you use to trade why 30 pips is your stop loss and 90 pips is your take profit. And then you have it at the back of your mind that whenever price goes in floating profit of 30 pips and above, you break even, right? So that if the price reverses against you, it will simply hit your break even and you will not lose any money. So once you have written this down, you'll be reading it every day so that it will be stuck in your medulla oblongata, in your brain, your long-term memory, so that every day you'll be remembering it and you'll become consistent with it. And you also make it as a point of view that you will only risk 1% of your trading capital. You also write it down every day. You read it. I must risk 1% of my trading capital, meaning it's going to take me 100 times before I can blow my account. So once you write this down and you read it every day, you understand it and it will be with you and it will become part of you. So with this, you'll be able to trade the forex market in the right way. Right now, you already have the right mindset, the right psychology, the best trading strategy, the best money management strategy, and the best risk management strategy. So you have everything. You have the complete arsenal. You have the complete tools to trade the forex market. So if you do this I've just listed for you in this video, if you start it from today, being January, by the end of 2024, that is by December 2024, you are going to smile to yourself because you took a decision that will change your entire life. So ladies and gentlemen, that is all I have for you in today's video. So my best advice for you guys is to take whatever I stated to you seriously, because I'm talking to you based on experience, based on what I've implemented, and I must say that it was profitable for me. So my advice to you guys is never to neglect this advice that I've given to you. Go and work it out, and before the end of this year you are going to smile because your bank account is going to get fat. So that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be notified whenever I publish new content. I will see you again in my next update. Bye.